everyone, welcome back to Fraser Valley's Eye on the Market. August real estate activity continued to be brisk, which when you think of it is unusual year over year. However, as we know, this is not a normal year. The pandemic has changed much of what we know, including the manner in which we look at real estate activity. At the board, we remain cautiously optimistic and are encouraged by the numbers we are seeing. For both sales and new listings, it was again one of the busiest on record for our region. In fact, August saw the second highest number of property sales and the highest number of new listings since August 2005. Why is this continuing? A couple of reasons: ultra low interest rates and, by all indications, the continuation of pent-up demand. Like we saw in July, pent-up demand continued to carry over from spring when everyone was in lockdown and our real estate safety procedures weren't yet in place. Here's where we landed by the end of August. Total sales in the Fraser Valley came in at 2,039. That's down 2.9% over July, but 57.2% higher than the same time last year. In fact, as I mentioned, it's the second highest August sales we've had at the board since August 2005. What about listings? They remained high. We received 3,309 new listings. That's a decrease compared to July, but 40.4% higher than August of last year. So what does this tell us? It indicates that we are seeing better sales volumes month over month because buyers are recognizing that the Fraser Valley offers increased choice and diversified housing opportunities while offering more value as well. By month end, our active listings came in at 7,404, a slight increase over July, but 7.9% below last year. The reason we're not seeing our supply replenish is because sales continue to be strong. Our sales to actives ratio in August was 28%. But let's take a deeper dive and look at specific residential property types. This is the detailed local data that you can get directly from your realtor. In August, the total sales to actives ratio for townhomes was 41%. For detached homes, it was 34%, while the sales to actives ratio for condos was at 23%, indicating that we appear to be in a seller's market. A balanced market for our region is when 12 to 20% of active inventory sells. The price of the typical house across the Fraser Valley increased by 6.9% year over year. Townhouse prices increased by 3% and condos by 4%. Higher demand and low supply continue to put pressure on prices. The highly competitive market with multiple offers and shorter days on market for various properties provides further indication of the role realtors are playing in this market. What we hear from our realtor members is how consumers are seeking their guidance, advice, and expertise during these unusual times. While predictions when the pandemic hit were for a slow summer in real estate, June, July, and August were not that. Is it because of COVID? Are buyers shifting to more space? Or is it because you get more bang for your home dollar in the Fraser Valley? It's all of these factors. During this pandemic, many consumers have attached a newfound importance to home. They've seen a decrease in daily commuting, experienced a desire for more outdoor and personal space, and finally have realized a need for a home office. I'm Chris Shields. Thanks for watching.